just wanted to do a quick introduction to our radio show slash podcast that we did today. Damon King and myself, Weston, our Chapelwood Financial Services radio show slash podcast. The radio show airs every Saturday, sometime on Sunday, and then you can find the podcast on all major podcast platforms. We also are going to start putting it on all of our social medias. I will have it on mine as well, so you can see all of it there. But today, me and Damon go into some of the weird things that some of the weird things that millionaires do with their money that may be considered weird from people who aren't millionaires yet. We dive into that. We also touch base on a lot of this week's updated financial news and market updates. Touch on that. So stay tuned, watch the whole video. There's a lot of informational stuff in there. Hopefully you get something from it, and watch some of our other videos. So we're trying to put this out to help you guys. And if you find any value in it, then subscribe and follow along. Thank you so much.
And welcome to another beautiful broadcast of It's All About the Money, Honey, here on Facebook Live. Hope that you've been having a great week. I'm Damon King, and this is Weston DePriest. We're both advisors here at Chapelwood Financial Services. The financial diva, Victoria Woods, is away on business this week. And you know that she's rocking and rolling wherever she is. Today's show, weird things that millionaires do. So we're going to be talking about weird decisions that millionaires make, or at least they seem weird to a lot of people. And then later on, we're going to give you some updates on some of the key financial headlines impacting your money. And we'll go over all that. So like us, share us, leave us a comment. And better yet, go to our Google profile, Google Chapelwood Financial Services, and leave us a review. If you've worked with us, you know us. Or even if you just think we're really nice people and my hairline looks so wonderful and amazing, leave us a great Google review, and we would appreciate that very much. Very easy to do. Here we go. Let's get started. Welcome to the weekend, and welcome to It's All About the Money, Honey, here on New. That's, I don't want to do that. I resort to my old ways. Let's try that again, all right? Here we go. Welcome to the weekend, and welcome to It's All About the Money, Honey. I'm your host, Damon King. I'm a certified financial planner professional and wealth manager with Chapelwood Financial Services, where we are advisors to millionaires. Chapelwood Financial is the sponsor of It's All About the Money, Honey. And we've been on the air for more than 15 years, and that's because of our fearless leader, founder, and CEO of Chapelwood Financial, Victoria Woods, the financial diva. She is away on business this weekend and will be back with us very shortly. However, I'm not alone. I am joined today by Weston Priest, wealth management advisor here at Chapelwood Financial Services, and very happy to have you on the show today, Weston.
Yeah, thanks for
having
me on.
Yeah, welcome back. Welcome back. Today we're going to be talking about an interesting topic. When you spend a lot of time working with millionaires, just like we do here at Chapelwood Financial, you begin to realize that they often don't think like everybody else. They're kind of in their own little world. Millionaires are a different breed of cat, as local sportscaster Dean Blevins would say. And sometimes they do things that most people might think are odd or even kind of dumb. However, as I share with all of our millionaire clients, becoming a millionaire doesn't typically happen by chance, doesn't happen by accident. It took time, hard work, and usually pretty smart decisions. Dumb people usually don't get rich. All right, that's just the way life is. So while some of the decisions that millionaires might make might seem weird to you, there's always some nugget of smart thinking, some nugget of wisdom inside those decisions. So that's what we're going to be sharing today, are some of these seemingly weird decisions that millionaires make, but that actually can turn out to be pretty good. Now, Weston, later on in the show, we're going to be sharing some other stuff. What are we going to be talking about later on in the show?
Yes, sir. So we're just going to go over some of the recent financial news kind of happening around the U.S. We'll touch on some of the housing market, some of the stuff on the U.S., Europe, nearing a tariff deal, some other news, maybe a little bit of new news on retirement and crypto.
Wow. Okay. Well, we've got a lot of people out there very interested
Yeah.
in crypto, so we get questions about that all the time. Now, before we get into our topics for today, for the next 10 of you that text us right now who have saved at least $1 million in their retirement investment accounts, we want to offer something very special. As we said at the top of the show, we are advisors to millionaires, and we've been doing that work for more than 30 years. So we know what millionaires want. We've become very good at creating plans for millionaires and analyzing their situation. So for you, the next 10 of you that had at least $1 million in your retirement accounts, and you text the word PLAN to 405-348-0909, we are going to make some time on our calendar to sit down with you and offer a complimentary financial review of your entire retirement plan. Why are we doing this? Because we are educators at heart. We love to teach and we love to educate, and we love to help you understand the decisions you're making so you can make better decisions and so that you can succeed. There's no cost for this review of your current plan. It's just a chance for you to get an education about your money. We have found that most people don't have a true understanding of three things: why they're invested the way they're invested, how much unnecessary risk they may be taking on in their portfolio, and probably most important, what is their risk of running out of money in retirement? They don't know the answer to that. We sit down with you and we will provide you answers to all three of these questions as part of this complimentary review. So again, the next 10 people that text the word PLAN to 405-348-0909, you'll receive a link where you can schedule a 30-minute introductory phone call with our Director of Client Services, Meg Wiest. She'll get on the phone with you, gather the basic information that you'll need to visit with either Weston or me to begin the process of creating your complimentary financial review. And we cannot wait to meet you all very shortly. So, Weston, millionaires are kind of weird, right? Or at least
Right.
that's what a lot of people might think.
Yeah.
We don't use the word weird. When you have money, you use the word eccentric. Oh, he's very eccentric. That's the, when would you use eccentric? When someone's got money. If they don't have money, they're just strange and weird. All right. So it's interesting how we use those words. So there are some weird decisions, or at least decisions that a lot of people might think are weird, that millionaires make. Choices, strategies, things that they use. And we want to touch on a few of those. One of them is debt. Millionaires use debt. In fact, our good friend and life coach Nate Scott says in his book, Life is Rich, How to Create Lasting Wealth, rich people owe lots of people money. And when I first read that, I kind of chuckled inside because I agree with him. Wealthy people tend to owe lots of money. Why? Because they know how to use strategic debt. They use debt in strategic ways. A lot of you might think, well, that's a little counterintuitive. Don't people get wealthy because they don't have a lot of debt? Isn't debt something bad? Debt is bad. We should avoid it. Well, yeah, there is some debt at Weston, like credit cards. That's stupid. There's some of you that went out to a Christmas party in 2019. You bought a $50 steak. You put it on your credit card. And you're still carrying that on your card, paying 27% interest or whatever it is. That's stupid. But there's other debt that is not stupid at all. In fact, it can be very beneficial. Things like using lines of credit. You can use a line of credit backed by other assets like real estate or maybe an investment portfolio. We call it a securities-backed line of credit. There's a home equity line of credit. Or often, if you own lots of real estate, you can simply go to a bank and say, look, I own $6 million in real estate. Mr. Banker, will you extend me a line of credit for $3 million, half of that? And the bank will take a look at your wealth and say, well, they've got assets that they could cover this as collateral if necessary. Sure, we'll lend you $3 million and we'd be happy to charge you 6.5%, 7% interest on that. when you borrow against yourself, you borrow against other assets that are appreciating assets and have value, it can be a really cost-effective way to acquire other assets. Maybe you want to acquire other real estate. You want to start a business, whatever that might be. Many millionaires, Weston, have life insurance policies,
Right.
and they'll borrow against those life insurance policies. And when you borrow, that's tax-free. Loans are tax-free, as opposed to liquidating your investment account and taking the distribution. That's a taxable situation, probably. Capital gains, that sort of thing. Or if you go out and sell a piece of real estate, you're going to have to pay capital gains tax, most likely on that. But if you borrow from yourself, that's tax-free. So millionaires do use debt. They just use very strategic, advantageous debt. So what's next?
I just wanted to touch on that a little bit more. Like up to a certain point, I would say, like all debt's bad. But then, once you do start to accumulate more wealth, I feel like you start to learn more about money and then how money works, and it becomes more so once you get to that certain level of wealth, most of your bad debts are probably paid off, and then you start learning about other ways to use debt to avoid taxes. So you start taking losses or deferring income. No one likes losing money on their investments, but there are times when it can actually be helpful. Millionaires harvest losses in taxable investment accounts to offset gains. Any losses that can't be used in a given year are carried forward to future tax years. Millionaires also know how to defer income to lower tax years. So if you, it's like kind of like I guess you would compare it to deferring your income to retirement when maybe your amount that your income is lower in retirement. So you want to kind of defer those taxes to that time period.
Yeah, and that definitely one situation where that's true. And or maybe even if you're a business owner,
Right.
Sometimes business owners, if they know that this year, man, I brought in a lot of income, but next year I don't expect my income to be as much. It's toward the end of the year. You know what? I'm going to tell the people that owe me money, hey, let's defer that till January of next year.
Yeah.
I'm going to give you a break. Really, what you're doing is deferring that income and recognizing it another tax year when maybe your tax rate will be lower.
Right. Yeah. So maybe you did the work in November or December, but you're like, well, I'll wait till January to get paid on this or something.
That's right.
Something like
That's
that.
right. Yeah.
But or instead of taking income that's taxed at the ordinary income tax rates, they harvest qualified dividends and long-term capital gains at a lower tax rate.
Yeah, and this is actually a strategy that even billionaires use. It's been reported very famously that Warren Buffett's effective tax rate is probably lower than most people listening to this show. Well, the reason for that is because his income, for the most part, is not ordinary income. It's not going to be taxed at ordinary income tax rates. If it was, he would be in the top tax bracket of 37%. Most of his income is going to come from qualified dividends, long-term capital gains, which are going to be taxed at 20% for him. And even if you add in the 3.8% net investment income tax, that makes his top tax rate 23.8%, which if you're in the 24% tax bracket, which a lot of you are in this listening to the show, his effective tax rate is lower than yours. He's paying more in overall taxes than you,
Right.
but his tax rate is lower because he knows what type of income enjoys lower tax rates. Here's another one. Paying more for better outcomes, not being afraid to pay fees for better outcomes. Millionaires, just like everybody, want to save a buck, okay? They don't want to just go out and frivolously spend money. However, millionaires are willing to pay for things they see as key to improving their outcomes, improving their situation. They're not out there to haggle over every little thing. Because when they see something that is valuable and they want it, they will go out and pay for it. For example, private banking. They will be willing to pay a little bit more to have a private banker, somebody a dedicated team that's going to handle their needs. They don't have to go and sit in the lobby and schedule an appointment. They can call up their banker right on the phone. They've got people, and they're willing to pay a premium for that service. Or what about something like direct indexing versus index funds? You know, a lot of people will go out there. You want access to the S&P 500. What do? You go buy an exchange-traded fund or a mutual fund to get you that. However, you're kind of subject to whatever the fund manager wants to do there. Millionaires will often do what's called direct indexing. Rather than buying an index fund to get access to the S&P, they will literally go out and buy parts of all 500 companies. You can actually buy every single one of those stocks. And now you are replicating the S&P 500, and you can control how aggressive you want to be on that. You want to lean more towards the aggressive stocks within the S&P 500. Maybe you want to lean more toward the dividend side of that. But the point is, you can control your risk and your income and your return much better with direct indexing. And millionaires will often do that. They're willing to pay a premium for that, to have an investment advisor or a portfolio manager do that. But millionaires are not afraid to pay people when they perceive that there's value there.
Yeah, I think you have to look at it on a ROI basis.
Absolutely.
Like, yes, I'm paying somebody to do this, but it's giving me back 3 hours of my time or whatever.
Mm-hmm.
In that 3 hours, I can make so much money from my business marketing.
That's right. I can make another deal.
Yeah, you know, I could spend 3 hours doing this, or I can spend 3 hours on the phone making deals. You know, kind of, you look at your stuff different. You know, like normally maybe somebody's like, well, I can save $100 if I just do this myself.
Yeah.
Which, so I can save $100 if I do this myself, but then once you have that money, you're like, well, I will spend the $100 to make $500 for an example.
Yeah.
But yeah,
I always like it when somebody will come up and say, man, look at these shoes. You know, I got them there. It cost $500. I got them 30% off, you know, and I just really like them. Well, you would have got 100% off if you didn't buy them.
yeah.
You know, now maybe you like them, but did you really need those shoes? You know, I don't know. So it's all about where you put your priorities.
Right. Yeah. But, you know, millionaires often times take the boring route when investing. Contrary to what many might think, millionaires are typically boring in their investment decisions. Yes, they look for unique investments like alternatives, which you could generate a lot higher return, but you also could lose quite a bit more.
Absolutely.
But for the most part, their portfolios are pretty simple. The secret is relentless consistency. And I feel like I use that term a lot, kind of across the board in whatever you're trying to do. If you want success in anything, I feel like consistency is key, and relentless consistency is really what does it. So they find what builds wealth and do it over and over again without stopping.
That's right. And they don't change. You know, they don't get bored with it and say, oh, this is so boring. I want to try something new. No, this works, and I'm going to keep doing it. At the very top of every one of these shows, every time you listen to us, every weekend, you hear our little intro. What do you hear Victoria say? Consistency will always outperform occasional brilliance. And that is true.
Yeah.
Whether you're managing your money, you are working out and you're trying to build your muscle or have a healthy body, in your relationships, building your business, it doesn't matter. Consistency is always the key to success. Consistency. How does a diamond created? With extreme, intense pressure and relentless pressure forced in one direction over time. Consistency turns a lump of coal into a diamond, and you can do the same thing with your life. Well, it's time for us to take a short break, and when we get back, there's a lot going on in the world of money and finance, and we got the key financial headlines impacting your money. So if you want to stick around, you're listening to It's All About the Money Hike. Right. Segment 1 is in the books. Ladies and gentlemen, we hope that wherever you are having a wonderful day and a wonderful week. It's summertime. It's hot outside, so stay hydrated. My advice is just don't do any yard work. Delay all your yard work till fall. Just let the grass grow. Who cares? It'll die soon anyway.
Yeah.
Well, Bermuda won't die. It'll just go dormant. And, there you go. Life is good. You have a built-in excuse for not mowing the grass. All right. Here we go. 3, 2. Welcome back to It's All About the Money. Oh, something's not right there. That was weird. What just happened there? Welcome back to It's All About the Money. Howdy, I'm your host, Damon King, certified financial planner, professional, and wealth manager with Chapelwood Financial Services, the sponsor of It's All About the Money, honey. The financial diva Victoria Woods is away on business this weekend. However, I am joined in the Diva Studio Suite by Weston DePriest, financial advisor, wealth management advisor here at Chapelwood Financial. Weston, thanks for being on the show with us today.
Thank you.
At our break, or just before we went to the break, we talked about there's some key financial headlines, Weston, going on in the world right now. And a lot of these were pretty interesting that you found. And I think we picked some of the ones here that are going to impact most Americans, or at least they have an interest in it, and they're driving markets, that sort of thing. So probably this first one is the one that is driving the most movement in the market. It has to do with a tariff deal with one of our major trading partners. So why don't you tell us about it?
Yeah. So everyone knows there's been a lot of talk the last 6 months or so on tariffs, back and forth. And the latest news on the tariffs is the U.S. and European Union are reportedly close to finalizing a deal that would place 15% tariffs on certain European imports. These would include aircraft parts, spirits, and medical equipment. This deal mirrors an earlier agreement with Japan and is part of a broader strategy to level the playing field and protect U.S. manufacturing. Markets have responded positively, suggesting that investors are seeing this as a step away from more disruptive trade wars. It's being seen as a less punitive move, and more of a structured mutual agreement to protect, I can't talk today, domestic industries while maintaining cooperation.
Yeah. And I think that's what the market was really looking for. I don't necessarily think that the tariffs in and of themselves are what caused the market a lot of anxiety to start the year. What caused that anxiety is the uncertainty. And that's usually what happens with the market. The market makes major moves, not necessarily because of what has already happened. The market doesn't base itself off of the past. The economy does. When we report the economy, we're reporting what happened in the past. But the market is a reflection of what we believe the future will look like. And so when people are uncertain, when investors are uncertain, they don't know which direction things are going to go, that's when things get volatile. But now it looks like we've got some direction.
Yep.
We know where these tariffs are going to go. And, of course, Europe is one of our major trading partners. Japan is too. And I think probably one of the last deals to be done will be China, because China will be the last holdout. You know, they're the one other elephant in the room that can go toe-to-toe with us. But even then, you know, the United States is still the strongest, most powerful economy on earth. And, our trade with China, as important as it is, really only accounts for about 1% of our annual GDP. It's not that big in the grand scheme of things. So, I think for the most part, yeah, the market's digested it and priced that in. Here's another one. Housing market, prices up, sales are down. The U.S. housing market hit a new milestone in June of 2025. The median home price, median meaning middle, not average, that's mean. So median means the middle home price, climbs to $435,300, which is a new record. That's interesting.
Okay.
But there is a catch. Sales volume of homes dropped by 2.7% during that same month of June 2025. And a big part of the reason for that is high mortgage rates. Interest rates are still up. The average is still hovering around 7%. And you combine that with extremely low housing inventory, and that's keeping many would-be buyers on the sidelines. Builders simply aren't putting up enough homes fast enough to meet the demand. And it's a simple law, the law of supply and demand. You probably learned it in your third grade civics class. And when supply is low and demand is high, price goes up. But in this particular case, I think there are a lot of people who are still sitting on the sidelines that would love to buy a new home or build a home, but it's difficult financing, a $550,000 new home at 7% interest. And then by the time you throw in property taxes and insurance, you're looking at a monthly payment somewhere between $4,500 and $5,000 a month. That's a tall order for a lot of people. So if you are looking to sell your home, it's kind of a double-edged sword. You can get a higher price because average prices are up, but the number of people looking is down. So you might have to be willing to negotiate a little bit on some of that. What's next?
So in some other news, this one's particularly interesting, there is some really big news for the world of alternative investments. Congress recently passed a measure that would allow 401k plans to include cryptocurrencies and other non-traditional assets. This bill is now awaiting an executive order from President Trump to take full effect. If approved, this would give Americans more freedom to diversify their retirement portfolios, but it also comes with risk. Crypto markets remain very volatile and lightly regulated compared to other traditional investment vehicles. Financial advisors, we will need to prepare for a wave of questions from our clients who are curious or concerned about how Bitcoin, might fit into some of these long-term plans.
Yeah, we get questions every week about not just Bitcoin as an alternative, but people want to ask about gold and real estate and investing in artwork, what have you. But obviously, crypto is on a lot of people's minds. And that's the thing is that, as advisors, our job is not to sit here and tell you what's good or bad. Well, we'll tell you the credit card debt is bad. Okay, that is true. But when it comes to an investment strategy, I don't tend to look at in any investment strategy as good or bad. I look at it instead through the lens of it's appropriate or inappropriate based on your risk tolerance. That's the thing. And when a client asks me, Damon, I want to get into crypto. What do you think about that? And then I start looking at their discovery and, all the conversations we had when they first joined us. And on a scale of 1 to 6, with 1 being most conservative, 6 being most aggressive, they're a 2. And they told us, I don't want to take on a bunch more risk, but you want to jump into crypto. There's a little bit of a disconnect there because crypto is about as aggressive as something can be right now. As it relates to crypto, there's literally nothing backing it. Bitcoin has nothing backing it other than people believe it has value. There's no government on earth that backs it. No government is regulating it. All right. So yes, are there some benefits to it? Does it have value? It has value from the standpoint that people agree that it has value, but there is nothing really behind it, which is why you see these wild swings up and down, Right. And the way you should think about investing in crypto at this point, and some of you may want to throw rocks at me through the radio. You say, oh, you don't know what you're talking about. Yeah, I do. All right. Because I've seen it happen. And right now, to me, there's no difference in taking $50,000 and investing it in crypto or going to Vegas, because you have an equal shot of that money either doubling or going to zero. That's just the fact right now. Now, at some point, sure, cryptocurrency like Bitcoin could become much more mainstream. And at some point, if it does become regulated, maybe it will replace our fiat currency. But that time is not now, and it is still extremely speculative. And if you have a moderate to conservative risk tolerance, you might want to think twice before you do that. Ask yourself, would you be comfortable waking up one day to see your investment that was $200,000 went down to $100,000 within the span of 24 hours? Because that's possible.
Yeah, or less.
Or less. That is possible with crypto. So you just have to be aware of those things.
The last thing we'll kind of touch on, just a quick market snapshot as of this morning. Dow Jones slightly down. S&P got a modest gain. Nasdaq's leading the way on strong tech earnings. The 10-year treasury holding near 4.3%. Oil prices are currently stabilized somewhere around $84 a barrel. Gold is up slightly, seen as a hedge against some of the policy uncertainty. Mood is cautious but optimistic. Investors are still watching inflation numbers closely, as well as the next Fed move. That kind of ties in with the housing market. You know, a lot of people, the Fed wants to lower rates to stimulate a lot of the housing market movement, but also we can't lower interest rates and risk jumping inflation
Exactly.
to the roof.
You know, that's the thing. And, you know, everyone's aware that President Trump is putting a lot of pressure on Jerome Powell, chairman of the Federal Reserve, to lower interest rates. And I understand why the president wants that, all right? But cooler heads must prevail here. And the reality of the situation is we are not yet at a point where we can begin lowering interest rates. We certainly don't need to raise them. The economy is actually in a great spot right now. The market is performing pretty well, even with the uncertainty of the tariffs, as well as the ongoing geopolitical tension that exists around the world in the Middle East and Russia, Ukraine, that sort of thing. Everything's in a pretty good spot right now. But if we were to just start lowering interest rates for really no other reason than because I said so, then yes, that could end up, that it would certainly stimulate the economy, it would stimulate the market, but it would stimulate the economy and consumer spending to the point that inflation would rise back up. Why do we have inflation? Because of you and me, ladies and gentlemen. We spend money. Consumer spending accounts for 70% of gross domestic product in the United States. And when we spend money, we tend to drive prices up. Why? Because money going up or money being spent increases demand. It's a reflection of demand. And the more people are buying, the less supply there is. The supply lowers, and as a result, prices go up. So we drive inflation. So if we were to lower interest rates prematurely, just as you said, Weston, that would most likely spike inflation. I do believe that we'll probably get maybe one more interest rate decrease, by the end of the year. I think so. But for the most part, we've been telling our clients, everything's in a good spot. All things considered, everything is in a pretty good spot. Anything else that you're tracking, that we've been talking about with clients? Anything on your mind?
No, not that I can think of right now. I'm sure as soon as I walk out this radio or the podcast room, I'll be reminded of something, but I can't think of anything. Right.
Yeah, there's always stuff out there that's going to be on our mind. Just one final reminder, ladies and gentlemen, for those of you that have saved at least $1 million in your investment and retirement accounts, if you text the word PLAN to 405-348-0909, text it right now or later on. If you're driving, don't text now. Don't text and drive. But wait till you get someplace and text later. You'll get a link on your mobile device where you can schedule a 30-minute initial phone call with Meg Wiest, our Director of Client Services. She'll take your information and gather the information that we'll need so we can schedule an initial appointment with either Weston or myself. And we will be happy to offer you a complimentary financial review of your entire retirement plan and sit down with you and answer 3 questions. Why are you invested the way you're invested? Are you taking on too much risk relative to how you want to be invested? And what are your odds of running out of money? Those are the 3 questions we will answer for you as part of that complimentary review. So again, text PLAN to 405-348-0909. Cannot wait to see you very soon. Thank you so much for listening this weekend. We hope that you got a lot of value out of this. And Until next time, I'm going to leave you with the financial diva's very best advice. Don't take advice from broke people, physically, financially, or spiritually.
Well done.
Ladies and gentlemen, thanks for another great show. Hope you enjoyed it, and we will see you next time. Bye-bye.
That's all for our radio show. I don't think I introduced him. This is Damon King.
What's up, everybody?
The king of finance, as we call him around here. But our radio show airs on Saturdays. You said
Saturdays at 1 p.m., Sunday at 6 a.m. You can listen on News Radio 1000, KTOK in the Oklahoma City area, or you can stream it live on iHeartRadio at those same times, anywhere you are in the world.
And we're going to be putting a lot of that on our social media channels as well. Oh, almost, the tripod almost fell down. But we're going to be putting it on a lot of our other social medias as well, so you could probably find it on there as well. So thank you all for tuning in. Hope you all got some kind of useful information on this. And like Damon said, we have these every week and try to bring y'all some good information that y'all can use. So thank y'all.